Yo, what's the dealio, y'all? You already know what time it is. Today we got another straight banger for you. All right. So today I want to do something. We could call it the trade of the day, or we could call it the lesson of the day. All right. I want to talk about how to maximize your profits with trading. Okay. Maximize your profits, minimize your risk. Okay. That's what we're gonna be talking about today. We went 3 for 3 in the Discord today. Um, I called Alibaba on a put, okay? We printed today. We talking 15, 20, 25, 30%. Some people got 38% on that trade, all right? Now, what I want to focus on today is how you can maximize your profit when you are in a play and you can minimize your risk, all right? So, the way that we do this is I'm going to go through the trade and show you what the entry and everything was, but I want to show you and let you know how to do this. So, first things first, you have to be getting more than one contract. All right? More than one contract. It depends on what you're used to. If you're used to buying, let's say, 2 contracts per trade, then this could work. You may want to go get 3 contracts, okay? So let's say you're getting in a trade and then, let's say you're getting in the put, okay? You really need to understand, you need to know where the stock is going first, okay? You need to know what your price target is. So when you're getting into play to the downside or to the upside, you need to know what your target is, all right? Based on your entry, and you need to be always know what you're willing to lose on this trade. All right. So, what is my price target? What is my take profit target? Once you know and understand what your take profit target is, that's when this strategy will be effective. All right. So, what you're going to do is I'm going to show you what my entry was, and then I'll break it down. Okay. So let's go to the charts real quick. Shout out to everybody in Discord, man. We banked today. People made some good money on Palantir and Alibaba as well, for sure. All right. So let's go right here. All right. Now, today I got into Alibaba and I call Alibaba, right? All right. So I got into Alibaba off the 15-minute, slightly later in the trade, okay? But nonetheless, it was a good trade. So yesterday, Alibaba closed right here. Alibaba closed right here at 106.74. That's where it closed at, okay? So I'm gonna put a level right here, 106.74. And what I'm gonna do is I'm gonna make this thick so you guys can see. All right. And then we're going to make it an actual line. All right, boom. So this is where it closed at yesterday. And then today it opened right here. All right. So this is where it opened at. It opened at 110 and it closed at 106. All right. So what ended up happening? Alibaba opened up here, wicked up, rejected, came, rejected again, came down. All right. I was thinking that maybe it could reverse right here, but it was pinned under these EMAs and it was pinned under the VWAP as well. And as you can see, this is a gap that it had to fill. Now, a lot of times Alibaba does not just go fill the gap immediately. So I wasn't expecting it to fill the gap immediately. But today it was trying to do that, right? So here's what happened. I saw on the 15-minute and also on the 30-minute, we had this 200 EMA and then we had all the EMAs right here. The reason why I did not enter in earlier is because we had a lot of EMA action and I thought we could have rejected and came back to the upside. So I wasn't trying to do that. So I said, if Alibaba comes below, let me turn these Bollinger Bands off. I said, if Alibaba comes below the 200 EMA and the 50 EMA, that's when I will take entry. Okay. That is when I will take entry. So That's exactly what ended up happening. All right. It came down here and it broke right here at 109.48. My level was if it broke below 109, it was like 67. That was where I was at. Right here it says 109.72, but it was 109.67 at the time, right? So if it broke below here, then I was going to enter into a put. And it came down here and it entered in. So what did I do? I entered in my put right here at the top of the candle. All right. So I entered in my put right here. Okay. So that was my entry. That was my entry. Okay. Now, I got 6 contracts. They were pretty cheap. So it was a good risk to reward here as well. All right. So I got 6 contracts right here. Now, what happened? When it opened up, it was coming down. It started coming down. And then it got right here. And I was up about 15%, 17% right here. Okay. So then I was like, I have 6 contracts. I'm going to exit right here. And then I'm going to leave 1 contract open so that I can maximize this position right here. All right. So I exited my position. I sold 5 contracts, right? And then we call them runners. I left 1 runner, okay? I left 1 runner. The reason why I left 1 runner, which is 1 contract still open, is because we could have came all the way down here right on this trade. So I said, because this was my target, and this is what I mean when I say you got to know what your target is, okay? Price target is down here. All right. So if I take a majority of my profits right here, I think it was like 18%, 17%, something like that. Then I'm still going to secure certain profits right here. And then I'll let my runner run until it can't run anymore. Right? So I let the 1 contract run. It was down here. It was down here. And then it came back up. It came down a little bit more. And then it started to come up. And my runner was up like, it was up like 17% or so. And then I actually ended up closing my runner out. It was right around here. It was right around here. All right. Fully position, exited. All right. I fully sold my position about right here. And I was done. And I was about 23 to 24%, okay, on that trade. Now, this is what I mean when I say a price target. You don't want to do this on every single trade. You want to know what trades have nice price targets, and then you want to size accordingly and start peeling off your trades at different prices. I mean, at different levels. Now, I could have gotten into this trade once it broke pre-market lows right here. Okay, but I did not. I got in when it was a sure shot under the 200 EMA and under the 50 EMA right here. Right? The reason why I got in is because we had a gap to fill right here. All right, 6 contracts entered in, let 5 go, sold them right here, let the 1 runner run, came down a little bit more, got a little bit extra percentage, and I was done. All right, so that's how you can maximize your profits with runners, right? When you have multiple contracts, you want to make sure you know what your price targets are, okay? So let's say you have, a $6 gap and it breaks below or above and it's 50 cents to $1 in the gap. You can say, okay, I'm gonna ride out my full position, 30%, to the target, and then I'll let my runners run until they can't go, and I'll set a trailing stop loss or whatever. The reason why you want to do that is because you don't know how far the move is going to go, right? And so when you secure a majority of your profits, let's say you invest $1,500 in a trade, and let's do 2,000 for easy numbers. You invest 2,000 on easy numbers in a trade, and then let's say you're up 20%. That's $200. No, that's $400 on a trade. And then let's say you let one runner run, and then that one runner gets you it goes up another $1 before it starts to reject. Now that one contract is up another 25%. Now you just went from 20% profit to, if you would have got out your full position, it would have been 20% profit. Now you up, let's just call it 35, 37% profit, and you were able to squeak out an additional 15, 17, 20% profit. All right. If you do this over the span of a year, 2 years, 3 years, you will be able to add a lot of money to your P&L over time. All right. Like I said, this doesn't work on every single trade. Some trades are in and out real quick. But when you have a stock where you know the price target and you know you're at the beginning of a move, or you're at a pretty solid move and it could be going further, and you want to take some profits, but you don't want to miss out on the move, and you have multiple contracts, sell a majority of your contracts, and then let one or two runners run, collect more profit, set a trailing stop loss, and then you're good to go. It's really that simple. Okay, so let me give you some rules of thumb. Let's say you have 5 contracts or less. Okay, you can just have one runner run. If you have 6 contracts to 10 contracts, you can let 2 runners run. Sell 8 and then let two run. Let's say you have 11 to 15. You can let 3 runners run or 2 runners run, and then sell the 12 to 13. You can do it like that. All right. But you want to take a majority of your profits to secure them, just in case it does reverse with your runners. You're not gonna have a super negative trade. So instead of it being 25% and it reverses and you have one runner, it was only 19% trade rather than negative 10% or a 2% trade. This is how you stay in the positive with trading over time. All right. So that's what I got for you guys. That's how you want to be able to maximize your profits, especially when you're confident in the direction of the stock and it is on a Friday. A lot of the contracts on stocks are very cheap on Fridays when you're using 0 day to expiration. So if it's very cheap on Fridays, you can use this strategy on 0 day to expiration. Thursday as well, because contracts are a little bit cheaper than they are on Monday. All right. Or if you have a larger account, you can do this every single day. But like I always say, you want to make sure you know what your actual price target is. Do not do this on a very small move. If you're only getting 3 to 5% on a trade, don't do this. But if you have a move and it's really got momentum and it's going and you don't want to miss out, sell a majority of your position, let 1 or 2 contracts keep going, set a trailing stop loss, and then it's all good to go. All right. So with that being said, I hope that helped you. Always remember, I always say, make sure you get out of your head, go get into this world, because your head is a dangerous place to live. All right. And also remember, the more you study, the less you worry. All right. I'm going to see you guys on tomorrow's video. Peace.